Welcome back. Forum Daily's crypto and digital asset update with Catherine Murray is up next. All yours, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your weekly crypto and digital asset update. I am Catherine Murray. Well, we have seen cryptocurrencies decline significantly alongside the equity markets, with Bitcoin looking to be down by about 9% week over week. Now, interestingly, here we are seeing the asset classes being driven lower by the U.S. Federal Reserve. Of course, they did raise the rates by 50 basis points on Friday and also announced quantitative tightening. The markets actually rallied on the back of that, in part because they said that 75 basis points in terms of a hike wasn't on the table. However, come Thursday, Friday, investors seem to be concerned about the tightening and the impact that will have on the economy, hence taking down the equity markets and also, of course, cryptocurrency. So bottom line, very, very much a risk-off mode. We will see, though, what transpires over the next couple of days. As we know, the cryptocurrency market is 24/7. Stepping back, though, from the market gyrations and looking at some of the crypto developments, Virginia's pension funds, some of the Virginia pension funds, are looking at two crypto funds that offer a yield of approximately 9%. Recall that Fairfax County, Virginia, was actually one of the first U.S. counties to put money into cryptocurrencies back in 2019. We're also seeing the adoption out of California. Interestingly, this week, the governor there did issue an executive order on crypto, really to lay out a map of regulatory and consumer protection for people living in California, similar to what we heard from the Biden administration back in March of this year, which actually helped the broader markets. It was a bit of a buy-in in terms of the sentiment to the broader market. Of course, just given the downdraft in the markets today, that's not helping. Away from that, the CEO of Coinbase, Brian Armstrong, said that, and said this at the Milken Institute Global Conference, that within a decade, he does see 1 billion people will have used or tried cryptocurrencies, up from about 200 million today. And at the same time, and just recall the market moves we see in Bitcoin, having said that kind of comment, the high was 69,000 in November, and it's down by about 17% on a year-to-date basis for Bitcoin. Interestingly as well, though, you've got Argentina and their central bank there saying that they will prohibit financial institutions from offering crypto services to their customers. So still a few different views on what happens next year. Always important, of course, to keep our eye on the regulatory front. The SEC, the U.S. Securities and Exchange Commission, is adding 20 more officials to a team to police cryptocurrencies and developments, blockchain, etc. So you are seeing that increase. Also, if you recall last week, we mentioned that Fidelity is now going to be allowing their customers to own Bitcoin within their 401k plan. Well, within the regulatory front, we've got actually Senator Elizabeth Warren writing to Fidelity CEO Abigail Johnson about this and really kind of questioning the appropriateness and asking what Fidelity will do to ensure their clients are protected from fraud as well as theft. Away from that, it's always important and interesting to look at the funds being raised to support the various areas within crypto and blockchain. And we do have a crypto trading startup. It's called Amber. It's out of Singapore. They are looking to raise $10 billion, looking to raise funds that would put the company's valuation at $10 billion. That's threefold their previous financing, which was $3 billion. And also, interestingly here, the crypto exchange giant Binance is among a dozen investors that will be backing Elon Musk in his $44 billion takeover of Twitter. According to SEC filings, Binance is looking to contribute about $500 million. You've also got Sequoia Capital, very well-known fund, adding about $800 million, and Fidelity adding just over $300 million. So interesting to see the crypto world financing part of Elon Musk's $44 billion takeover of Twitter. Nima, I'll leave it there. Back to you.
Thanks for that, Catherine. That was Catherine Murray, host of The Buck Stops Here.